The bull market is well and truly upon us, and the number one fact to keep in mind is that the final phase of that market cycle is here. This is when charts go absolutely parabolic, huge profits are made, which means it's also when profits have to be taken. Essentially then, it's a bit of a tightrope act. You need to let your winners run enough. You don't want to sell too early, but at the same time, if you wait too long, you fumble the bag. It's essential to lock in gains in. You never want to be left holding the bag when the music stops, because mark my words, the music will stop and a lot of people are going to let their bags go back to zero. They're going to round trip everything. Don't let that be you. So how do we navigate the most manic phase of the cryptocurrency market? Well, let's take a look at how the cycle plays out from here, possible rotations, when the real top might arrive, and how to spot it, as well as how to grab bull market opportunities as they arise. So let's start by talking about altcoin season and sector rotation. So when Bitcoin dominance is high, altcoins underperform. But then if Bitcoin cools off and dominance falls down, then altcoins can rip. We've been talking about this in videos this week, by the way. What tends to happen in altcoin seasons is that cash moves first into ETH and major altcoins like XRP, Cardano, Dogecoin, and then progressively down the chain to smaller big cap altcoins, mid caps, low caps, meme coins, maybe NFTs. NFTs are going to make a comeback. It'll be silly. However, that being said, ETH has been an underperformer this cycle so far, while meme coins have absolutely smashed it. So be prepared that the cycle isn't guaranteed to progress in an orderly manner. It never really does. So it's good to have your plays set up early and wait for the market to come to you, because it's probably going to. So instead of trying to chase every shift in attention, just get your damn conviction bags, believe in something, and wait. Now, before we talk about trying to time the cycle top, would you like $200 free? Of course you would. How about 6 free Solana? Obviously you do. Well, guess what? BitUnix is going to make it happen for you. BitUnix is a no KYC exchange. Yes, no KYC. It means you can enjoy privacy while trading all of the top coins, not just your Bitcoin, your Ethereum, or Solana, but top meme coins, top altcoins. They got loads of stuff where they're free, guys. Trade on both spot markets and on leverage. They're now running some insane giveaways. Deposit $2,000 or more and get $200 for free. Okay, that's an insane deposit rebate. Plus, you can get the 6 Solana back depending on how much you trade, which is insane. Now, to get these bonuses, it's super simple. Click on the link down below, deposit $2,000 or more, and then start trading. That's it. Now, it's a very limited time offer, so you need to act now. Okay, now the next thing we need to discuss is cycle top timing. Obviously, just sell the top, right? Ultimately, everything in crypto, up to now at least, leads back to Bitcoin. Even if you're not holding any Bitcoin, all your other bags depend on the orange coin, because it leads the entire cycle for the market. So as you can imagine, one of the most valuable points to identify is when Bitcoin will hit its cycle top. That's why we talk about it here all the time on the channel. Keeping in mind, of course, that altcoins have tended to peak about 2 weeks after Bitcoin reaches its final market peak price. A look at this chart shows a very clear pattern at work. It's almost like clockwork, in which there are 152 weekly bars from the previous bear market low to the following bull market high, in which case we should expect the next peak to arrive on October 20th, 2025. If only it were that simple. This does fit squarely, though, in with the observation that the top comes in Q4, 4 years after the previous top, the 4-year cycle. Also within each cycle, there are repeating periods with distinct characteristics, meaning that if everything is going as usual, we should have transitioned in November from an uneventful consolidation period into the major markup upside phase of the market, which is exactly what happened for those who are not paying attention, and suggests that the rest of the cycle could play out with some kind of relative order as well. Now, there's always wild cards. Maybe the market tops in March or April and it's over earlier than expected. That would catch a lot of people with their pants down. However, it's good to be open to all possibilities. And there's also speculation that the accelerated top theory could be a valid one, right? There's a lot of reasons to think that March and April top could come in, maybe even earlier. That'd be real crazy. Now, possible reasons for this include the idea that everyone now knows about the halving cycle and enough people will be looking to exit ahead of the crowd that the peak is pulled forward. But when markets are too greedy, nobody believes any of this stuff. I was telling somebody the other day, like, they said, dude, you need to stop telling people you're going to sell. Everyone's going to like front run everything all the time. Like, man, when I sell, everyone's going to call me an idiot for selling. That's the perfect time to sell. Now, this all ties in with the idea of decaying peaks, as well as strategies play out repeatedly in the market. Returns diminish, profit-taking periods shorten. Additionally, there's Trump's inauguration in January. The expectation is that the new administration will be usually pro-crypto, which should in theory be bullish, right? Unless it's buy the rumor, sell the news. The market is trading bullishly now ahead of the new administration actually getting to work, which sounds like the perfect kind of setup that could lead to a sell the news dip when Trump's actually inaugurated and on day one he doesn't buy 1 million Bitcoin. The news in this case being not the election result, but the actual inauguration and the transfer of power itself. So now let's talk about cycle top signals. So you can see there's still multiple ways that the cycle will play out. Nobody's got a crystal ball and anybody tells you that this is exactly going to happen like this, that, or the other thing. They're blowing smoke up your butt, okay? But the good news is that there are also a whole load of indicators that you can look at to figure out when the top might actually be in. Now, I'm not going to go into them all in detail here. We've got a separate video coming in that for you soon. But as the bull market heats up, you should be keeping an eye on stuff like the net unrealized profit loss indicator, the NUPL, okay? The MVRVZ score, the pi cycle top indicator, all these great indicators that can help you spot a market cycle peak. And do remember, in the bear market, prices moved down on bad news, but didn't react to good news. Well, in a bull market, it's the opposite. Up on good news, on nothing on bad news, sometimes even up on bad news. It's ridiculous sometimes. So if at some point you start to notice that good news is no longer having a positive effect on the price, well, take note of that. Might be something worth paying attention to. It may be that buyer exhaustion is finally setting in. Everyone's out of money. Nobody's left to buy the coins, guys. It happens. Now, what about bull market opportunities? So let's finish up on this very important thought. And you gotta listen up for a minute here. This is very important on your success moving forward. Let me just restate. The biggest gains happen in the final stages of the cycle when mania is in full effect. So if you're feeling late, don't worry. You still have opportunity. We're in the early stages of the markup phase. It's not gonna last forever, but if you're watching this video when we publish it, you still have opportunity, okay? And new opportunities will appear and pop off crazily throughout the whole bull market. And there will always be an opportunity every single day of this market cycle. Every single day, okay? Even just recently, an entire new meta exploded into life in the form of AI meme coins and AI on-chain agents, suddenly taking over the mind share of the whole social media landscape, meaning you can simultaneously be late to the cycle but early to a fresh new sector. So again, there's always opportunity, okay? But if we're talking generally, it's getting late. And then on the totally opposite hand, we just saw a bunch of dino coins, quote unquote, from previous cycles: Cardano, XRP, Stellar Lumens, wake up and pump multi-hundreds of percent in an absolute insane, mind-bending price surge. Congratulations to all the holders, by the way. The point being that in this stage of the bull market, opportunities can come from all directions. This means that if you're sidelined, you should be looking for opportunities right now because they're out there still. Back in the bear market, every little bounce up, of course, just led to a bigger drop straight after, which is pain after pain after pain. But in the bull market, it's the exact opposite. As long as the uptrending structure holds, dips on strong coins should be followed by more gains. However, you do also need to think about the risk-return ratio. You see, when you're buying at bear market lows on a solid coin, your Bitcoin, your Ethereum, or Solana, you're getting an incredible risk-reward ratio because crypto's not going away. Everyone might be bearish because it's the bottom of the bear market, but it's not going away. It's going to come back eventually, but fine. What are you risking at that point? Not as much. But if you bet on a brand new token very early, as long as it's good, the same is true as well. So a token that launches tomorrow at a low market cap has that similar vibe to it, right? So it's a good, fundamentally good thing. Or you jump into a trade late during the mania phase, your entry is inevitably going to be nearer the top. And this is where the problem starts coming, meaning that your potential returns diminish. So keep in mind when you're thinking about price targets, if you buy Bitcoin at $180,000, for example, what's your max upside? 250K? Sounds great, but then when you do the math, it's only what, a 30, 40% gain? Not that crazy, is it? XRP investors have seen XRP pump hundreds of percent in the last few weeks. Now, what's the maximum upside potential from here? $10? Is it going to go up another 300, 400%? Maybe. But is there something else that can give you more than 300 or 400%? Probably. Now, that's throwing shade on XRP there. I'm not saying XRP is a bad investment or whatever. You guys who are XRP heads, you know what we're talking about here. But we're talking about risk reward. Now, for a lot of people, getting a 3x is going to be an insane gain. Okay? But for a lot of crypto investors, they want a 30x, not a 3x. So it becomes a bit different, right? Depends on the kind of risks you're willing to take, your own personal risk profile, and how much you're willing to risk. Because of course, crypto is risky and you can lose all your money. Thanks for watching.